Welcome to the video YouTube. I hope you're all having a fantastic day. In this video, we're going to be looking at how you can make an enormous saving on your corporation tax bill when you're an Amazon seller and make a savvy investment at the same time. Something that I've done personally, and it saved me tens of thousands of pounds. And I'm going to be giving you guys an example, showing you my account and showing you how much I've saved and how you can literally do exactly the same as me and you can make savings yourself too. So I want to talk to you a little bit about what I'm talking about. Now, this doesn't just apply to Amazon sellers, this applies to all limited companies. So mostly Amazon sellers will be watching this video, so we're going to theme it around that. Now, what I'm talking about here, guys, is directors' pension contributions. So if you are the sole director of your limited company, you're able to make pension contributions every year. Now, we all know a pension is somewhere where you put money, you save it away until you're 55 and you can get it out. So you might think to yourself, well, I'm not really worried about when I'm 55 now. I want, to spend all my money now, and that's the way I want to do it. Well, if you do that, you are not going to have a nice big pot of money when you retire. So, we're going to have a look at what that means. Now, when you do your annual accounts for your Amazon FBA business, you are hopefully going to be turning a profit. Now, on that profit, you will have to pay corporation tax. So I had a student message me this week and they are doing their annual accounts for the third year and they've profited just under £50,000. Now, that profit is calculated after their turnover and then they deduct all their expenses and how much money did they make. Right? They made £50,000. So we all hate corporation tax, but it has to be paid, and it's 19% at the moment. We'll look at just 20% as the example because it's easier for my math skills. But this student will have to pay £10,000 corporation tax, right? 20% of the £50,000. Now, that isn't necessarily what they have to do if they are clever with the way that they invest their money. Now, you were allowed a director's contribution into your pension for £40,000 that classifies as a business expense and therefore can be deducted from your taxable profits. Now, let me give you an example of what I'm talking about. Now, if you, for example, profit £40,000 from your Amazon business, in theory, you would be able to make a contribution of £40,000 into your pension, and that entire amount reduces your corporation tax bill to zero. So you wouldn't pay a single penny of corporation tax because you have chosen to invest the entire £40,000 into a pension. Now, it doesn't need to be the entire 40. You can invest different amounts. Again, something to think about at this stage is, you're not going to be able to access this money potentially for 25 years if you're 30 now, for example. So what I would suggest is really thinking about your cash flow, making sure you've got enough money to reinvest to launch new products, for example, and restock your current products. But if you do have excess profit that literally is going to be sitting in the bank, then you're going to be paying corporation tax on it. So another example, if you were to profit £50,000 and you were to choose to put £30,000 as a director's pension contribution into your pension, then you would save £6,000 in corporation tax. You'd deduct that 30 from the 50 and you would only pay corporation tax on the remaining 20%. Now, it gets better than that. So over the last few years, I have made contributions into my pension from the multiple businesses that I have. And from all the pension contributions that I've made, I've saved about £16,000 or £17,000 in corporation tax. Now, that's money that literally I would have just burnt, but now it is sitting in my pension fund, which isn't a typical pension fund, and it is making me money. So thinking about the future, guys, we talk a lot about being prudent, not always thinking about right now, but also focusing on what your life will be like in 25 years, how you want to live your life in 25 years, as well as enjoying the current moment. But I use a company called Nutmeg. Now, they're a fantastic investment platform, and you're able to invest in lots of different ways. But specifically for this video, I've invested into my pension. Now, that pension is then invested into exchange traded funds, or ETFs. Now, I'm not going to get too into the specifics of this because I'll bore you to death, but essentially Nutmeg will invest my money in a diverse range of good companies, and we will see a return hopefully on that investment. Now, depending on how risk averse you are, you can set your risk level from 1 out of 10 to 10 out of 10. I've personally got it set to 10 out of 10, and it has been running for 2 years now, and I've made a return of 40%, a weighted return of 40%, that meaning that it's changed over time, over those 2 years. At different stages, there was different amounts in the pot, so obviously it's not all just a straight line up, but I've made just shy of £15,000 from those investments with a 40% weighted return. Now, I would have got nothing like that if I'd have kept it in the bank. You know, God knows what I would have made, if anything at all. So that pot now is sitting there, having saved me, firstly, £16,000 in corporation tax, and made me almost £15,000 from my interest that I've gained through the investments that have been made from Nutmeg. So nearly £30,000 in 2 years better off from doing this, guys. And it is, the Nutmeg are a professional platform. They are #1 in that space, and they're actually managed by JP Morgan now, so a huge investment company that you've got peace of mind that your money is safe. So even if you don't use Nutmeg, right, if you have got a highly profitable Amazon business and your profit is just sitting in the bank, which some of you may reinvest some and the rest is just sitting in the bank, make a contribution to your pension. You know, why not make a huge saving on corporation tax, and also then be wise with your investments and get a return from the investment that you've made into your pension. You know, we always say, use your money to make money, right? So make it work for you. That money's been sitting there and it has worked for me to make me 15K over 2 years, literally without lifting a finger. So yeah, I think that it's well worth exploring. Speak to your accountant about it. You may well not have heard that you're able to do this. So I'd speak to your accountant about this, discuss it with them, and speak to a professional. This is just my own personal experiences. And yeah, something to think about, guys. I hope you find this useful, and I'll see you in the next one.